Hello and welcome to farmbusinessconsulting.com USDA March 28th seeded acres and quarterly stocks report. I'm Ken Ploss and I'll be guiding you through what happened with this report and what the trade is doing now and what to anticipate in the future. So of course, like any report, we have to start with what the trade was thinking before the report. And that leads us to our pre-report estimate for the seeded acres. And we saw corn coming in. The average of what the trade thought was 97.3. I'm not going to get into all the decimal points. There was some out there thinking 98.5 and as low as 95.7 is what we were looking at. The USDA from their outlook form in February was anticipating 96.5, so that's where they were coming from with their beans or with their corn estimates for their seeded acres. On the other side of the coin for soybeans, they had some interesting numbers. Highest trade estimate was 79.7, which would be a record high. The average trade estimate was 78.3. So we see that there was, even the trade thought there was going to be about 1 million more acres than last year. Again, down here is last year's numbers, as we had 77.1 for soybeans. Wheat, pretty much the trade thought 56.5 roughly is what we'd be looking at, a high end of 1 million higher, 1 million lower. Going into last year, we had 55.7, so the trade was anticipating that wheat was going to be up as well, and that there was going to be basically about 3 million more acres seeded going forward. Now, once we get into the report, remember that number of what the trade was thinking? We see corn coming in 97.28. Trade was figuring on an average of 97.3. Beans, trade was thinking up in this range of 78.3, and beans came in substantially lower. Basically, if we look at what last year's plantings were, just lower than last year. Again, with corn, slightly higher, but pretty much flatlined. We'll get into that in a couple slides as the last 5-year averages. As you know, that's what I like to use for crops and 5-year averages. So again, these are the actual numbers, and this is what farmer intentions are right now. If you remember, wheat was at 56.4, and that's where we came in at. Again, last year, 55.7, so a few more acres as we see basically a small decrease in the soybeans, which lost some ground to cotton, which I don't have on this slide, but cotton has gained some ground as there's been strong demand from China. When we break the wheat down, again, what matters to us up here in Canada is the spring wheat, and we see spring wheat up basically plus 0.4 million acres is what their spring wheat's going to be at. But again, as we look into what their spring weather's looking at and their snowpack in the northern states, will this number actually get into the ground? I doubt it. I doubt even in Canada if we'll get as much wheat in as what we thought. So it's going to be an interesting time leading up to our seeded acreage report coming up in the future here in April as well too. Let me just clear these drawings out. So quarterly stocks were released today, and this is really what the trade focused on. I believe next week, mid to late next week or the week after is when they'll actually get into the seeded acres. As of course we get closer and closer to seeding and it not being a potential because of flooding or snowpack, then we'll see a panic in the market as well too, because there is less acres going in the ground than even last year. So as we see, this is why the market's going crazy this morning. If you looked, well, that's not the best color. Let me change colors on my pen here. Okay, we got corn at 5.3, let's just say 5.4. Average trade thought is what we'd have for quarterly stocks. Again, this is the report that was supposed to be released on March the 9th, USDA WASDA report. But because of the spring storm, mysteriously the USDA held off. So somewhere in the last 4 weeks, I don't think they were going to release this number here and beginning of March, but somewhere in the last 4 weeks, they mysteriously found basically 300 million bushels of corn. Again, this number is 5.3 billion bushels. So somewhere they found this number, and nobody seems to know where. One interesting marketer from DTN said somebody better phone the 10 barges or 10 ships coming in from Argentina with corn going to ethanol plants, that it's no longer needed because apparently they have enough in the States. So again, the trade is seeing something in the market, and commercial demand, the ethanol plants, just like the canola crushers, are seeing something else, is that there's none out there. So it's going to be an interesting few months coming forward here with this corn. But again, by the time we hit about May, let's say 21st, I'd like to say third week in May, these numbers will pretty much be irrelevant because they'll be focused on new crop corn, not old crop corn. So generally, USDA plugs in somewhere between January and March more findings, which is this, as to stocks. And then in this time frame here to July, they take away this number completely and say, oh, we were wrong, or demand picked up, whatever they want to say. Soybeans were a little bit higher as well. I'm going to get into that. Actually, I should do it right now with the soybeans as to why I really feel this number isn't legitimate either. Is if we get into the stocks on the website, if we get into the stocks report as to where we're looking at stocks in the U.S. Just hold on here, I got to log in. Of course, I didn't have this ready when I was here, or before I was ready to go with the video. Okay, so as usual, I like to refer to the website, and if we go to the weekly export sales, which were released before the USDA report this morning, here's an interesting note on soybeans. Like I was trying to point out on the last slide, is this is since March, this is what their exports have been. So let's just total it up to a rough total of 1,000. And this is what was needed for them to actually go down to zero in with a carryout stock. So we still see this number here of 97, still much higher than the 87, as nothing has slowed down on their exports of soybeans. And I believe this is going to be the market that is going to drive going forward. It's not going to be corn, it's going to be beans in the next 2 to 3 months, as they don't have any more in the States. So again, beans are down today, but interestingly enough, we, the USDA found more beans even though the exports are up. When we get into the same export supply side or export demand side, we also look at, this is corn, we see it's higher. It's still 6% behind the 5-year average for the pace at this time. But again, $7 corn will do that. Now the corn is down 40 cents this morning. Probably by the time the dust settles next week, it's going to be down 50, maybe even 60 cents. I believe you'll see this number pick up if there is any more corn out there. There's still a dispute over that. But if we see this number, or if we see the price go down, we'll also see the demand side pick up for it. So if you remember, probably about 6 weeks ago, this number was trailing about 12% behind. So it has picked up. They are using more corn. Same with the wheat. We see wheat now just about right on pace with export and domestic use for feedstock, just about on pace. As we see no more than even 5 weeks ago, it was 5% below. And if you remember, a few months ago, it was upwards of 10 to 15% behind pace. So obviously wheat is being used probably because there's no more corn in the States, and wheat is being used for feed supply stock. Very similar to what's happening in Canada with 3 Red right now being used for feedstock, just simply because it's higher than a milling wheat. So again, quarterly stocks, interesting to note, they found a little bit more wheat, even though I've showed you over the last 4 weeks that wheat exports have actually picked up and caught up to their 5-year average for pace. So somehow they found more wheat out there as well too, and plugged that into the stocks, the quarterly stocks. And once we get into the futures, you'll be able to see what I'm talking about as to what's happening in the futures right now. This is the seeded acres in the States over the last 5 years. And then we see a steady climb in corn. Seems to have plateaued now. Interesting to note that this year here is our year that we're currently going into the seed. And the weather webinar I was on last week says the States weather, Western Canada weather, is going to be very similar to 2 years ago. And in this year, you probably don't remember, they were forecasting 93.6 million acres. And by the time all the dust settled, because it was so wet with the flooding, they only got 91.7 million acres in. So again, if we say this is 2011, we got 2013 is what we're on right now. If we plug in the 97.3 is what they say we're going to have going in the ground, and take away just about the 2 million, and let's just put it at 95.4. If it is very similar to the melt that's going to happen, probably what we'll see is the soybeans. Of course, this is corn. We're going to see the soybean number go up from 77.3 likely to 78-ish is what we'll see because of their cropping changes that we'll lose from here. So definitely not out of the poor weather scenario right now in the States, but it's still going to take some time to funnel through the market. I really believe that today is nothing more than just end of the week, end of the month, end of the quarter. Very similar to how I hate the end of December reports that come out, and that's even worse yet because it's the end of the year. But these reports at the end of the month are killer, and then when you couple them with ahead of a long weekend, which they're going to take protection regardless, even if this was a very bullish report, they'd be taking protection. You couple that with it's the end of the month and the end of the quarter. Of course, corn is down, and right now it's down limit. It's down 40 cents, but as you see in my conclusion, nearby bearish due to the quarterly stocks. But fall corn is very bullish due to weather and due to the lack of acres going in the ground. I really don't think we're going to see. I think we're going to see sub 97 million acres of corn going in. Beans bullish on both fronts, nearby and fall. We see it at one point. It was down minus 58. And currently, we'll see what it's down once I click into that. Wheat is just wheat. Wheat's neutral. It's been neutral for likely about 2 years now. We'll wait to see what kind of winter wheat damage has been done. But again, with today's drop, I can't see it going much higher than where we were even 2 days ago. Time has showed us that it definitely won't probably go up any higher. So that's it for the presentation. Now, like I said, I'm going to get into the futures and where we're sitting at. Just bear with me while I bring the screen up. So here's the futures that we're sitting at. I'll change my pen color here. Okay, we see canola down, nothing more than just following beans down. Beans are down 52 cents. Like I said, at one point they were down 58 cents. But again, we don't see fall moving as much. This is nearby beans and this is fall beans. So, of course, with lower acres going in the ground, beans for fall aren't dropping as much. So what we're seeing is this inverse market. Just like in canola, the inverse market is going away. And it looks like, you know, both July futures are coming down on canola, but November futures aren't losing as much. So that flip around may occur within the next 8 to 12 weeks, which it generally does anyways. Down in the cereals, we see some pretty ugly corn. Like I said, locked limit down since about 2 minutes after the report. Again, it was yesterday, it had just hit, or 2 days ago, I should say, it hit a 7-week high. So, you know, it was due for a correction, and we've seen a correction. Now we're right back to where we were basically 3 weeks ago. Same with the wheat market. Wheat did nothing more than follow corn down. Sorry about that. The page is refreshing, so that's why we're losing a little bit of the ability to control the drawing on there. So again, like I said, this number here is reflective of just corn being down. We see Kansas City down as well too, more than Minneapolis, simply because they're taken into the weather as to will these acres actually get seeded in the hard red growing area. And interesting to note, we see corn down limit on the nearby, but we don't see fall corn dropping quite as much. So it's going to take some time. Like I said, I project it's going to take till Wednesday, Thursday of next week. Could even be all week for this to digest through the market. And then they'll actually start looking at the report and looking at the numbers, because just like I said, there was nothing actually that says it should be down this much. Corn, if it was 2 million acres more, beans, if it was 1.5 million acres more, that I could see. But panic is going to ensue, and that is what has happened. So it's time just to buckle up, worry about getting our crop in the ground, and go forward. This stuff, it's going to be very volatile. Some projections I heard from DTN on Market Analyst this morning is beans are going to go to $16.50, and we see they're trading at $14. So again, very tight supply situation in the States on everything but wheat. So we're just going to have to wait until the commercial end users try jack the price up a little bit more, or weather scares going forward. So I don't see any questions. So hopefully if you got any questions, get a hold of me over the weekend or early next week. And like I said, it's going to take some time for the traders to digest this, so I wouldn't get too wound up with some of my end-of-day texts coming in the next couple of days. It's like I said, it's just going to take some time for this to move through the market. So talk to you again next week. Bye-bye.